Okay. So it's Friday. You guys have all finished the mini assignment on PayPal and their debt offering. So what I do want to do is go over this because that'll lead into our discussion next week about negative rates. So Monday, PayPal raised $4 billion in a corporate bond offering. All right, $4 billion selling corporate bonds. Interested? Let's go. Let's also pull up to see if they need this money. What do we have to look at? To see if they actually need $4 billion, what do you often have to look at? Yeah, so let's pull it up. So let's pull up the PayPal balance sheet. Let's take a look. Let's see what it looks like. I'm not going to rush and go crazy trying to find what they reported in earnings. I'll just find their 12/31/19. All right. So we are looking at current assets, total current liabilities, receivables, cash. All right. So we're looking at total assets of $51 billion, total liabilities $34 billion. So they're already positive. So they have debt, but they definitely have more assets than debt. Okay. Cash. They have about $11 billion in cash. All right. Other receivables, they're looking at $26 billion that they should have coming in. All right. So you're looking at, that's 27 and 10. You're looking at $37 billion that are pretty liquid. All right. 37 billion liquid. And they actually have payables, $5 billion in debt. Non-current, we can round that into $7 billion of debt. All right, and the rest are expenses of $26 billion, which we would have to see if we can break down taxable accounts, so it's not going into detail. They definitely have a significant amount of liquid assets with very limited debt. So here's the question, right? Why are they doing this? Before we get to that, let's finish up number one. Did we find out what their interest rate is on this? Were you guys able to figure that out? And you guys can unmute if you guys want to unmute. So it is in the article. If you read, right, the first line, the digital company's 10-year bonds with the aggregate principal of $1 billion were priced 160 basis points over treasuries under the deal yield to about 2.3%. It says the same amount as the cut PayPal takes from its customers in the United States. That to me is a big deal. Okay. Another $1 billion has been raised in 3-year bonds. So you have $1 billion at a 10-year bond. Okay. Which is paying a higher interest yield than the treasury. So if you can buy treasury bonds or PayPal bonds, which bonds would you purchase?
PayPal.
Yeah. Why would you purchase PayPal?
Because PayPal has a higher yield. You're gonna get more money.
Simple, common sense. That's exactly, that is common sense. I want to go where the money is. And we just looked at their balance sheet. Do you think PayPal is at risk of not paying you back as somebody who's buying their debt?
No.
No, right? They're healthy. Good job, Chris. They're healthy. They have a lot of assets and limited debt. It's pretty damn good. I'll take it. Oh yeah, I'll take it. So, $1 billion for 10-year bonds. Then they have $1 billion at 3-year bonds, pricing at 1.35%, 5-year bonds at 1.65, and 30-year bonds at 3.25%. All right, that's APY, that's your yield per year. 1.35, 1.65, and 3.25. They're expected to close May 18th. Okay. Now, we just saw on their balance sheet almost what, 5 billion or 4 billion in debt, and look right here. That's exactly what they're using it for. They're using the new debt, which is for 3 years, 5 years, 10 years, and 30 years, to pay off their credit line that they've been tapping into when they needed some money. So they'll use 3 billion of that 4 billion to pay off this debt. So they are paying off debt with more debt, right? But they're paying off debt that is due immediately with debt that is due in 3, 5, 10, and 30 years. Does that make sense?
Mm-hmm.
All right.
I don't understand that. Can you like rephrase that, or like I don't understand that.
Okay, so I'm gonna annotate because I'm better at drawing, and since we're not in school, this would be the best way. So they have a 3 billion. PayPal now has this due, right? $3 billion loan.
Yeah.
Soon. Okay.
Mhm.
They don't want to use their cash. They're planning to use their cash for something else.
Mhm.
We don't know what that is yet. I'm speculating, but we don't know what that is. So what PayPal's going to do is they're going to sell 4 billion in bonds, right? So corporate debt,
Mhm.
a 10-year bond, a 3-year bond, $1 billion in a 5-year bond, and $1 billion in a 30-year bond. So you have 1, 2, 3, 4. There's your 4 billion in bonds.
Mhm.
Now, they will owe interest every month on these bonds. But the actual principal amount doesn't have to be paid off for 3 years, 5 years, 10 years, and 30 years. This has to be paid off sooner, right?
Okay.
So you take on 4 billion to pay off 3 billion, and what does that leave you with?
1 billion.
1 billion that they can play with, right? So this is debt that is due now. This is debt that is due later. So you take on longer term debt to pay off the debt that's due now.
Wow. Oh yeah, that's smart. Oh, okay.
Now, it is smart, but they have cash. We just saw they
11
have
11 billion. 10, almost 11 billion. 10 something.
they have so much in cash.
Yeah.
So what are they doing? That becomes the issue. What are they doing? Right? So if we look at the questions we came up with, we know the interest rate and we know what the cost will end up being. All right? We know what the offer is. 1 billion for each. 3-year, 5-year, 10-year, 30-year. Why are they doing this? Are there any theories on why they're doing this? We know they have to pay off the debt that is due soon. So we know that. We know that this credit line is due now. The 3 billion that's due, it's due now. They got lucky because interest rates are so low that they will owe very little interest on this debt. And they have a great credit score. They're probably what? Did it say what they're rated? Triple B?
I think it was yeah, I think it's triple B. Triple or double B, I think. I think it said in the article that you sent us on our phones.
Yeah, I remember seeing that also.
Yeah, me too. Yeah, let me check again.
PayPal, Moody's.
Triple B plus.
Triple B plus. Okay, so if we look at the credit rating scale,
Mhm.
if they are triple B plus, they are definitely medium grade, lower medium grade. So they're not junk. They're lower medium grade. It's not A, so it's not great. If they were upper medium, they could probably charge even less on the bond rates. But either way, so now we know where they're rated. We know that their balance sheet is relatively healthy. Why are they doing this? All right. So we know the first reason why is to pay off that 3-year debt. To pay off the current credit line they have. All right. What would be another reason you think they're taking on more money? At a time like this, why are they taking on more money, more debt? Not going to let you guys off the hook. Take a guess.
All right.
Throw a dart at the wall.
All right. I think that they're taking on debt because they want to keep the amount of cash that they have on hand free so that they can either expand or invest into other companies or maybe even acquire a few companies like they did with Honey.
Okay, so this is like the moment where PayPal can succeed, right? They are online shopping. They are the vendor. Nobody wants cash. Cash is not king. Online payments are king. So they might be hiring. They might be trying to grow outside of the United States more. They might be looking to make an acquisition, like you just said, right? So there's a company called Mercado Libre in South America. That is basically the PayPal of South America. There's another one called Stone in Brazil, which is supposed to be like the little brother of PayPal, like a little brother of Venmo in Brazil. You start making some investments there. You know, they made the investment that we spoke about in the fall. They made that investment in that China company that does payments. So they're really trying to get their hands into various economies. This is a big deal, right? I think this is a big deal. But you can't do that unless you have money, right? So I would agree that they're using this to expand. Definitely. How? I have no damn idea, but I'd be excited to see what they do. Because at least now you guys understand, like, how can you afford it, right? You guys are starting to really grasp this. So my question is, why would you take on debt then? If you have cash, why are you taking on debt? Why not just use the assets that you have?
Because
Wait for the question. Oh, sorry.
Go ahead, Adrian. Go ahead.
For the question prior, do you think it could also be because in the article it says how the company reported mixed earnings? Like, do you think it has anything to do with that?
That PayPal reported mixed earnings?
Yeah, they said that they reported like mixed earnings. So like,
Yeah, so
back to like question.
Mixed means some good, some bad. Revenue, earnings per share, expenses, those are the real major 3 things. Margins, 4 things. So mixed earnings means they had some good news, some bad news in the report. I don't think the debt offering has really much to do with that. But question 3 could have something to do with earnings, right? So why would you use if they had mixed earnings, why would you use debt instead of cash? Or it may have nothing to do with earnings. All right, as an investor, so Adrian, let's say that you own PayPal stock. Do you like the idea of them having cash?
Yes.
Okay.
I like them having cash.
Say it again.
I do like them having cash.
Okay, good. What have we said is the most important thing in this current economy for a company? They're what?
Assets?
Yeah. That's exactly it. It's the asset side of their balance sheet. That's the most important thing. The asset side of their balance sheet. If they start actually removing cash from this part of the balance sheet, imagine that cash pile went from 10 billion to 6 billion. That might scare you as an investor. Would you agree?
Yeah.
However, if I'm PayPal and I told you, hey, listen, Adrian, Mr. Power here, CEO of PayPal, listen, we have cash. We're going to keep our cash. We have debt coming due. Instead of using our cash, we're going to use debt that's not due for almost 30 years. 3, 5, 10, and 30 years to pay off this current debt. What would you say to that?
I mean, I would question why when you have the cash.
Good. You just finished telling me that you like the idea of PayPal having cash, didn't you?
Yeah.
They want to keep the assets strong.
So keep the asset side of your balance sheet strong. That's exactly it. Keep this whole piece of assets stronger. Also, check this out. The entire world is slowing down as an economy. The entire world. You get low interest rates on your debt. You might be able to use that cash to grow. So instead of taking on debt to grow, take on debt to pay off your debt. Then you can be flexible with your cash if you want to make an acquisition or if you want to reinvest it into the business to expand. All right, so it's kind of like you can take out debt to grow or you can take out debt to pay for debt. It's kind of the same thing. But since the world is so focused now on balance sheets, on a healthy balance sheet and healthy assets on your balance sheet, it's pretty important that they keep their cash pretty liquid, that they can use it. Because liquidity allows them to navigate the world, right? So take on the debt to pay off your debt, and you still have your cash. That way you're able to move around, right? If they paid it off using cash, then they now have less cash to be flexible and move around. Does that make sense? Hello?
Yeah, that
Okay.
makes sense.
All right. So Adrian, it's kind of like a crapshoot, to be honest. It can go either way. You can say, why not just use your cash and not make your liabilities higher? And then you can say, well, how about I keep my cash so I can have it if I need it, but increase my liabilities. And that's kind of what they're doing. Plus, you might not get a lower percentage rate on debt ever than now.
So it's kind of like opportunity cost. Like it's like the right time to take out debt because interest rates are low during the pandemic.
Yes, so it's the right time to take on debt if you have a healthy balance sheet. If you're an airline and you take on debt, this is scary because you aren't making money. At least PayPal's making money.
Yeah. Yeah. It's true.
Yeah, so that's kind of it's a difficult situation to be in. I like number 4. Why is this relevant? They talked about the business merchants and consumers in the article. Let's go back to the article. Why was that relevant? It's in this right here. Why is that important? Anyone?
I think it shows that it can pay off the debt because it says this is the same amount as the cut PayPal takes from the customers in the United States.
Dude, you got it. Right?
Okay.
You got it, brother. You got it. This is great. You're telling me that PayPal is taking on debt and they don't even have to pay the interest. Who's actually paying the interest?
Customers.
Customers are.
Yep.
This is amazing. This is spectacular.
That's genius.
As an investor, this is fantabulous. So you're going to tell me that PayPal can take on debt to expand. So long-term growth, this is going to help PayPal. And short-term, when it comes to paying off the debt, they're not going to owe any interest because the customers are that PayPal's customers, that little interest they pay on transactions is going to be what they pay for interest. Beautiful. Now, as an investor, Adrian, do you like that?
That's where I see that this whole taking on debt would be a smart move. So I do like it.
So now you like it. Good.
Yeah.
PayPal likes you too. So that's the thing. So that is a huge deal for them. And now if you dig deeper, right? So they're saying that 2.3%, right, is what the percentage return is what the percentage they're going to owe on the 10-year bonds. They owe 1.35 on this bond, 1.65 on this bond. This merchant rate also covers what amount of debt? Right? So 1 billion, it's the same amount as the 1 billion of the 10-year.
Mm-hmm.
But what about the 3-year and the 5-year?
Another 1 billion?
Say it again.
Another 1 billion?
So it covers, so merchants are paying 2.3%. 1.35 is the interest rate for the 3-year. So PayPal's actually still making 1% even after paying back that interest.
Okay, I see. Oh, yeah.
Same thing with the 5-year. The only money they're actually ever going to owe is on the 30-year, which is 3.25.
Oh,
What do you guys think of that?
it's crazy.
Good or bad?
Good.
All right. So now, let's move down the list. As a potential investor, we already discussed that we love this. Were you guys able to name any acquisition targets? I already gave you a couple from Brazil and South America. I'd like to know if you saw anything yourselves.
No, I haven't gotten to that yet.
Okay. Did anyone get to this part yet? And if you didn't, that's fine. Just asking. Okay, probably not. So that is my goal here. So that was the important thing about this debt, okay? I don't want to sit here and take on, I told you guys we'd be done by 9:30. We're a few minutes over. This is important, right? Because a lot of companies are doing this. Apple just did this, which is a big deal, right? PayPal just did it, which is a big deal. And we'll see how many other businesses do it. Monday, we're going to start talking about negative interest rates because that is possible. So right now, what's the federal funds rate, guys? Current federal funds rate? 0%. Thanks. Right? The discussions are we go to negative interest rates. That's the discussion now. That's what Trump wants, negative interest rates. I think this is an epically stupid idea, and I will share how stupid it is on Monday. Do you have any questions on the concept of the debt offering or why you keep your cash? And do you have any thoughts on your script as you guys start getting ready to write your script this weekend? Do you have any questions on that?
Wait, so for the do now, it says write 5 bullet response and the 6 questions. So is
No. So just do the questions. I'll edit that right now. No, just do the questions.
Okay, thank you.
Yeah, read, and I'll change it right now. It'll say read and do the questions. I'll update that while you're here. Read and write the responses to the questions. There you go. Okay, good.
Yeah, thank you.
Good. Before I let you guys go, any questions on your scripts as you guys probably start to get into those this weekend a bit?
How do we hand it in?
So you'll hand it in right here. The script submission is due next Wednesday. You'll hand it in as a Google Doc right here. And you can just do it just like the format I did, which would be just like this outline that we went through. You can go straight off this type of an outline and you'll be fine. But you'll submit the script under the M&A script submission, which is right here. And then the actual link for the video, you guys will end up doing right here.
Mr. Powers, is that outline posted on the Discord or something?
The outline is posted in the script assignment. I put the outline as a Google Doc. So if you click that link on the script submission, it'll open this up right here. You guys can literally copy paste this bad boy.
All right.
Got it.
All right. This is just to really help you guys organize your ideas. Okay?
Mm-hmm.
All right, guys. If you need me, you guys got my number. Call.
I have a question.
Oh, good. Sweet. What you got?
Sorry, it's regarding the script. So I know that we have to submit the script like 3 days before the video is due, but will you be like looking over the scripts to just like check it over before we do videos?
Nope. A lot of you guys had wanted extra time because you have finals. I would have done it if I made it due Saturday. Since we didn't, it'll be difficult for me to read all of them Wednesday, so I'm not going to read any of them because it wouldn't be fair to the sum of you. What I will do, though, is if you do it early, you can email or text me it, and I will take a look.
Okay.
All right, so if you guys send it to me early, I will gladly look at it. Okay?
Okay.
So if you want that critique and feedback, get it to me early. If you send it to me Wednesday, I can't promise I'm going to look at it because it's only 2 days before the actual video is due. And once you give it to me to look at, I'm going to be critiquing it. Right? Once I give you a critique and edits, you're going to have to probably include those. Which, if you don't send it to me till Wednesday, you're not going to have it memorized by Saturday to pitch. So I gave you guys till Wednesday to give me the outline. I really expect it to be done earlier for you personally, for you guys, so you guys can actually practice your scripts. So you sound rehearsed and you sound ready like experts in these mergers and acquisitions. But yeah, from today until next week, I'll be more than happy to look at it. Even if you ask me next Friday to look at it, I will, but I'm not going to go crazy because your video is due Saturday. You know what I mean?
Yeah.
So I'm going to give you all credit for doing it if it's laid out correctly. I'm not going to check for the content. I'm going to leave that content piece to you. But if you do want a critique, you will have to contact me individually, personally for that critique, okay?
Okay.
All right.
Yeah.
I will let you guys go. If you've got nothing else, any more questions?
No questions.
All right. You guys are wonderful. I will see you guys on Monday. We'll talk negative interest rates, and we'll talk about the end of the world as we know it if we go to negative interest rates. I can guarantee you that. All right. If you have questions, reach out. Okay. Talk to you guys soon.
Thank
Appreciate
you.
it for helping me understand how that debt works. The debt works.
Of course, it's important for you guys to know. All of that's important for you guys to know. If you guys have questions on any of this, just reach out. Don't hesitate. You guys have a wonderful day.
Got it.